Hello, everybody. If you guys can hear me, see me, and see my screen, do type it in the chat box below so that I know that you guys are able to see me, hear me, and see my screen. All right. So yeah, if you guys are able to, please type it in the chat box, and then I can begin the webinar shortly. All right. Okay, great. Okay, let's begin the webinar. All right, so today, welcome back again to another webinar brought to you by IronFX. And today's webinar series will be covering Introduction to Smart Money Concepts, also known as SMC, as well as Market Structure. This is part 1 out of 3. All right. So as usual, this is the disclaimer below. Remember that everything in this webinar is educational in nature and nothing should be construed as investment or trading advice. All right, so please remember to do your own due diligence before you guys trade. Okay, I'm your host for today. My name is Boon Hong, and I'll be going through with you today's topic on SMC. All right, so very simple. For the agenda, we'll be going through 4 different learning points. Firstly, will be what is the smart money concept? All right, and secondly, SMC versus traditional price action. Third, core principles of SMC. And lastly, key SMC terminology. All right, so after I go through all of these learning points, I will head on to the trading view to show you guys a simple strategy on how you can trade SMC. All right. Okay, so basically, what is the smart money concept, also known as SMC, right? SMC is a trading methodology focusing on how the institutional traders trade or move the markets, right? Mainly banks, hedge funds, as well as market makers, right? These are the big players that are moving price in the markets, all right? That's why you can see how price usually have very huge engulfing candles, right? As well as something like liquidity. All right. So yes. So it's basically looking beyond the retail indicators. Retail indicators such as your uh, moving averages, your RSI, your stochastic indicators, right? SMC actually focuses on price manipulation, liquidity, as well as market psychology, right? This takes a lot of time for you to master, but once you are able to master these smart money concepts, you'll be able to trade better, right? Instead of the traditional price action. Okay, so for the goal of SMC is to trade with the smart money instead of trading against it. So basically, once you learn how to trade SMC, you are trading together with the institutional traders, right? Like the banks, hedge funds, etc. All right. So this in turn helps the traders to understand why price moves, not just how it moves. Okay, because sometimes we see that why price moves in a certain way, but actually Oh, sorry, my internet just shut down. Let me see if everything is okay. Okay, everyone. Okay. All right. Okay, let's resume from here. Okay, yes. Okay, so for traditional price action, right, it focuses on your S and R, right, such as your support and resistance levels, as well as your trend lines and candlestick patterns, right? Um, it also relies on past price levels for your trading decisions. All right. Not that traditional price action doesn't work, right? It actually works, but sometimes, right? I'm not sure if you guys realize, right? If I were to, okay, if I were to use something like this, right? Then let me see. Okay, let me show you guys an example. Let me show. Okay, so for example, let me show you guys. Basically, what if, where is my, yeah, okay. So let's say I am looking to, okay, assuming, right, now we are looking at traditional price action, right? And of course, we can see right here, we have a very nice level of, very nice level of overlap support level right here, right? You can see how price actually respects this level. We have so many touches around here, right? So of course, what we are looking at would be a buy here, right? But if you look at how price moves, okay, you can see how price moves. You can see how price actually, if you took a buy, right? If you took a buy position over here, your stop loss placed below this low TP right about here, almost 1:2 risk to reward ratio, right? Let me just mark it up. First resistance, and then this is my support. Okay, so essentially this is where I'm looking to enter. Okay, to the upside. Okay, this is traditional price action, yeah. Okay, so this is what I'm looking at, but you can see how price actually just took out our stop loss is so easily. And the reason why is because there is a bigger level right here that price is looking to enter from. This is your point of interest. Okay, why I say that this level is your point of interest is because you can see, number one, this is the last downward movement before the bullish engulfing candle, followed by multiple bullish candles. All right, and this is where it actually had a change of character, followed by break of structure, etc. Right, so this is the starting point where price actually had a bullish momentum. So of course, this is our level for buys. Okay, so let's see how this plays out. Yeah, you can see how price actually reacted. If you highlighted this area, right, instead of a line, so instead of the usual line over here, which is your swing low support level, right, you highlight with a box. This is what we call our order block. Okay, then so how you will enter would be top of the box, then stop loss placed below this low. All right. TP, where should you target? You should target this previous swing high over here. All right. I'm not sure if, let's see. Yeah, okay. So far, if you entered, price is still playing out. Okay. So traditional price action works, right? But SMC, if you are able to master SMC, it will allow you to trade together with the majority of the big players, right? Instead of just focusing on SNR, you focus on order blocks, market manipulation, etc. Right? So all in all, SMC focus on liquidity, order blocks, inducements. Inducements meaning um, this is what we call inducement, meaning we have a gap over here. So price will tend to, let's say we have a strong move downwards, price will tend to come up and fill this gap. Price will come up and fill this gap. Okay, so I think it's pretty straightforward. All right, and it is also considered as a institutional intent behind price movement. Institutional intent meaning it is caused by big players, right? They already know that price will come towards that order block, and then they will have a lot of buyers buying at that order block. Okay, so the main key difference is that traditional reacts to patterns more often, while SMC anticipates institutional movement. All right. So I think if you guys have watched YouTube videos, etc., right? There are a lot of SMC videos and all that, right? Sometimes it might confuse you a little bit because the content is more complicated than traditional price action. But if you religiously learn more about SMC, you will be able to find a strategy that works well for you and is not that complicated as well. All right. Okay, so for the core principles of SMC. Yes, sir. Here's for the core principles of SMC. Firstly, we have market structure, right? Market structure meaning identifying BOS, which is also break of structure, as well as change of character. All right. Market structure is just two very, very simple things. Break of structure as well as change of character. Just these two things. All right. If you are able to master market structure itself, right, you'll be able to see whether the direction is a buy or the direction is a sell. All right. Then the next thing is, of course, liquidity. Liquidity, where stop loss orders are packed together, right? And price and price is drawn to these liquidity levels. All right. So let me show you guys what is liquidity. So very simple, just a very simple analogy. Liquidity is basically looking at all these long wicks. You can see how all these long wicks, you can see how price are drawn to these long wicks, right? It will be bound to take out all these long wicks. If I were to show you another example, let me try to find, yeah, sometimes we have this thing called equal lows. You can see right here, these are your equal lows, and equal lows are bound to be taken out. That's why price actually took out this liquidity over here. All right, so back to my slides. Okay, then the next thing is order blocks, right? So order blocks is basically the last downward movement. If you're looking for buys, is the last downward movement. Just now I was, yeah. Okay, if you are looking for buys, right, what you will see is bearish candle, last bearish candle, and then a bullish engulfing candle. Then you mark out the range of this bearish candle. That is your order block. Then price will come down to react to this order block. All right. How about sells, right? Sells would be, if you look at this level, let me show you. Let me show you some cells. Okay. Yeah, this is your order block as well. Last upward movement, all right, followed by a bearish engulfing candle, followed by consecutive bearish candles. So you mark the last upward movement. So this is your order block for sales. All right. Okay, I think it's pretty simple. And then the next thing is supply and demand zones. All right. So to me, right, order blocks and supply and demand zones are relatively similar. Right. Supply and demand zones is basically just enlarged version of support and resistance zones. Okay. So you're marking out a range instead of just a single line. All right. So these are kind of similar. All right. Then after that, we also have something a little bit more complicated, which is your manipulation phase, right? So we have our false breakouts and liquidity hunts before the real move. Okay. So this is basically let me see. Let me look at. Let me find a liquidity hunt. Let me try to use gold as an example. Okay, liquidity hunt. Yeah, okay, so this is an example of a liquidity hunt where you can see how price actually took out this high. All right, so price took out this high, and then the next thing is price. People will be looking to buy, right? Because we have a change of character, we have break of structure, right? So of course, people will be looking to buy, right? Something like this, right? But of course, you can see after it took out liquidity, right? The next thing it did was to took out these lows and then came down quite a bit. All right. So sometimes you have to be careful for such movements, right? Because we might not be able to anticipate such false breakouts. All right. So this is something you will have to be careful of. Okay. One tip that I usually tell people is that there are different timings that I only enter. So London, 8:30 p.m. to and take note this is Singapore time. So So do convert yourself into your own time zone. Okay, New York. 9:30 p.m. Okay, so this is the timing that I only enter. Anything outside of that, I wouldn't enter. All right. So you can see right here, if I were to place, yeah, right here, this is out of my trading zone. All right. So I will only have traded right about this timing right here. Yeah. Let me go hourly chart. Yeah. So what I will be looking at would be for price to take out this low, this equal lows. Okay. Then what I'll be looking at is for a retest. So let me see, where is my, okay. Yeah. So you can see here, after price broke, we have our fair value gap over here. Then I waited for price to touch the fair value gap. Okay. Then where is my target? My target would be this level over here. Why I chose this level? Because this is our next order block, right? Potentially, price would react to this order block. Okay, so if I look about here, yes, indeed, once price touched this order block, it had a reaction. So this is to play safe, right, and exit before we start to feel some kind of roller coaster feelings, right? So getting a risk to reward ratio of 2.4. Yeah, roughly about there. You can see how I wouldn't filter and enter half of the fair value gap. I would have entered right at the fair value gap here. Okay. So if you realize, if you notice how you can identify market manipulation, right? These are equal lows. All right. I know that this equal lows is where the money is at. All right. So price will break through these equal lows. Okay. Then we have very strong bearish candles over here. So what I am looking at next is the first fair value gap that is formed and enter off the fair value gap. Okay. Okay. Next thing. Okay. So the last part of it, right? I'll talk about the last part and then we will. Okay, I'll talk about the last part and then after that we will go through examples on. Yeah, I will go through examples on trading view itself. All right. So for key SMC terminology, all right, you can see liquidity equals stop loss pools that are targeted by smart money, right? Just now, for the example, I showed you guys that there are different types of liquidity, right? The one that has long wicks, and we also have equal lows or equal highs. All right, those are liquidity levels that are bound to be stopped out. Okay, and then next thing we have order block. Last bullish or bearish candle before the strong move. I showed you guys just now as well. And then this one I don't really use it that often, which is BB. BB meaning breaker block. It is a failed order block that becomes future support or resistance level. Okay, so let me show you guys an example of a or BB. Oh, this is gonna be a bit tough. Let me see. Let me see. Okay, let's look at H1. Okay. Let me try to find an example. Okay, yes, this could be our, let me see. Hmm, okay, this could potentially be our breaker block. Okay, okay. Why is this our breaker block? Is because you can see right here, firstly, it was an order block. All right. Then what we can see next is we have a change of character over here and then a break of structure. All right. So last bearish, we highlighted the last bearish candle. All right. So this is our order block. But I think we had a news on this day itself. Price broke through this order block. And then, but I'll still keep it there because there is an opportunity for price to come back up and act as a breaker block. Okay, so indeed you can see how price actually reacted to this breaker block over here. All right, and then it started to become bearish. Okay, so this is one of the example of a breaker block. Usually I wouldn't use breaker blocks because it's kind of complicated, right? And it's hard to spot as well, right? So what I'll just use is fair value gap on the block as well as Fibonacci levels. Okay, all right. So then the next thing, of course, we have our good old fair value gap, which is an imbalance between buyers and sellers, right? So if you focus on the fair value gap, you can see how this there are a lot of fair value gaps that you can spot, right? Um, right here, gold works pretty well with fair value gap. You can see this is probably one of the fair value gap over here, right? Then I will usually just highlight this area, right? So this is my change of character. Okay, so this is my change of character. Once price drops down, once price drops here, right? I will look at price action, see how it works, and then I will enter buys to take out this high over here. So roughly about this level. Yeah, 1:3.54. I'll leave some gap for price to breathe. I wouldn't put it so tight. I'll put it slightly below. My max would be about 50 pips, right? So my target would at least be 1:3. Okay, give me a sec. Let me take a tissue. Okay, so far so good. Anybody have any questions? Right, if you guys have any questions, type it in the chat box here, yeah, so that I can look at your questions. Okay. Okay, so if you guys don't have any questions, can I get a thumbs up so that I know that you guys are on track and are able to understand um the all the concepts so far before I continue? Oh, yes. Okay. So let me explain equal lows again. All right. So if you look right here, equal lows might not be that often, but let me show you guys an example. Okay. Equal highs and equal lows. Okay. Let me try to find equal high. Okay. So sometimes, right, you can see something like this, right? Oh, like you can see these 2 weeks, okay? And then we have this thing, which is almost like equal lows, right, Vijay? Can you see? Right, equal lows, almost equal, right? So this indicates that there is liquidity present here. A lot of people would enter off buys here, right? But the big players would want to take out liquidity at this point. So to them, big players, to them, this is liquidity. But to retail traders, this is a buy entry. All right. So if you spot like for example, equal lows and there are multiple times where price has already reacted to this level, then my advice is to not enter any buys here. Okay, if it is still fresh, right, meaning that it is still fresh. Okay, meaning let's say price is something like this, right, then there is an opportunity for you to enter. All right, there is an opportunity for you to enter. But if price has already played out, right? You can see, let's see, tap. That's the first time it tapped. Okay, second time it tapped. All right. Once second time it tapped, then I wouldn't enter anymore, right? Because it is not a fresh order block. Yeah. So this is just something that I noticed for the longest time ever, right? Usually, if it's fresh, right? If it's fresh, it is the best. Okay. So yeah, this applies to most of the pairs. Yes, no worries. Yeah. So you can see, right, some very simple things. So let's say if you were to enter here, you already saw that price, you already saw that price broke past. Okay, so very simple stuff. You are waiting for a retest into this fair value gap. Okay, right? You know that it is bullish. This is your fair value gap. Okay, then what you are looking at is for price to tap into this fair value gap. All right, right about here, stop loss placed below, slightly below 40 pips. Then what about your target? Your target would be, let me see. Yeah, eventually your target will be this high over here, which is your liquidity point. Okay, but I would take profit at the body of the candle. Where is my, okay, going back to H1 again. All right, so this is eventually my target. Okay, let's see how price plays out. Okay, tap. Okay, then go back to our, most likely you will have, most likely, right? You will have already hit, I would say, is this even 1:1? Yeah, 1:2, right here. You could have taken most of your profits here and shift your trade to break even, right? Or some people would just let it run because they believe in the strategy itself. Okay, but I would suggest along the way, try to take some profits because you wouldn't know how price would react, right? You can see how price actually came back down to your entry, right? So this would cause people to panic, right? And then exit over here, right? Okay, so let me see. The next thing is, okay, then we also have market structure for the last two part, break of structure and change of character. Break of structure meaning confirming the continuation, be it bullish continuation or bearish continuation, while change of character meaning trend reversal. Okay, so let me show you guys an example. Okay, so you can see right here, let me see. Okay, so very simple things. This is, of course, break of structure. This is break of structure, right? Then, how do you identify this is BOS? BOS, okay? But once it comes here, this is your change of character, okay? This is your change of character. So once price breaks here, let's say price comes down here, this is your BOS. Okay, so it might seem a little bit confusing, but basically change of character just means that uh reversal. All right, so after we have one change of character, then let's say price continues in that direction, then it will continue to be break of structure, right? Nothing too complicated. It's just how you view it. Yeah. Okay. So if you practice long enough, right, you can easily spot a lot of this, right? So let me see. Let me go to USD CAD. Okay. Let me see. Oh, this is a little bit messy. Okay. Let me use Euro dollar. Okay. So right here, break of structure, break of structure, break of structure, right? Then afterwards we have change of character, break of structure, break of structure, break of structure, change of character, break of structure. Yeah, so I think it's pretty straightforward. Okay, just have to keep practicing. All right. Then here is a change of character, break of structure, right? Break of structure. Yeah, so now we are waiting for price to create another break of structure. Okay, very simple yet effective method. All right. Okay, so far so good. Any questions? If you guys don't have any questions, right, let me show you guys a very simple uh, strategy that I use. Okay, let me show you guys. Okay, so looking at gold right now, right? Looking at gold, okay, we already have a change of character, right? Because we saw how price actually took out these lows, right? This is a stop hunt, right? Taking out liquidity. So there is no chance for price to continue bearish anytime soon. So we will look at H1. Okay. So once we look at H1, the next thing we will look at is where is H1 going? All right. So we have our change of character right here. Okay. This is my change of character. Okay, this is my change of character. And then next, I will highlight the fair value gap. Okay, I'll put it as FVG. All right, then I'll start to use my Fibo retracement level. Okay, then if I see 61.8% within my fair value gap, then I will enter buys over here. So I'll put my buy position right about here. Stop loss can put about 50 pips. Okay, TP right about this height, 1:4. All right, some people will place it here, but you can see how the risk to reward ratio will have taken quite a huge hit. Oh yes, okay, so yes, my friend. So usually indication no, right? For example, if you are right here, okay, there is no way that you can tell that price would have a change of character. More likely, I would expect price to continue breaking these lows. Okay, so when I saw how price broke past this low, I know that price took out liquidity already. Then after that, we have a huge bullish engulfing candle, right? Then of course, the next level that I'm looking at is for price to take out this high, right? If price takes out this high, then I can enter off a potential fair value gap over here, right? They can see how price actually took out this high. Then I just label this as my change of character. Then let me see, as of now, price is still going up. Okay, we are on the H1 chart, right? But more often than not, price might, yes, technically speaking, yes, there is a higher probability of change of character. Yeah, because once we took out liquidity, right, price will generally, most probably not continue bearish, right? Sometimes it might, sometimes it wouldn't. But because it's gold, right? Gold always have this kind of funny patterns, right? If you noticed. So yeah. So I would say adapt, react to the markets and adapt to it. Okay, we cannot really expect or predict how price will act, but we can place our setups once we see all these things happen. Okay, technically speaking, I would have wanted to look at sales. Once price is about here, right? Then it created this bearish candle. Yeah, once it created this bearish candle, technically I am looking for sales. But after I saw such a huge bullish candle in the Asian markets, in the Asian session, right? Then I realized that actually sales don't look too good, right? Then I noticed that in this session, right, we have a change of character. All right, so once we have a change of character, then we have a fair value gap as well as Fibo retracement level. So these three together, liquidity hunt is one. Secondly would be change of character. Third would be fair value gap, and fourth would be Fibo retracement level within the fair value gap. Okay, so once I have all this, I would tend to enter. Yeah. Okay. Hope that makes it clear. Let me choose another example. I like to use live examples instead of like back testing examples because you can go back and try on your own and see if it actually works out in your favor. Okay, so here, right? So far I think there's no level for it to enter. Let me see H1. H1 no level as well. Nope. Okay, let's move on. How about GBP USD? Yes, Colin, feel free to type in the chat box if you have any questions. Oh, I think USD CAD will be fine because I see we have a change of character right here. We have a break of structure right here. So technically, okay, sure. Okay, yeah, change of character, break of structure. All right, then I will enter. This is my fair value gap. Okay, what's next is to mark out your fib level. Okay, so if it's rather close to each other, okay, I think it's fine to enter. Okay, and this is what I mean by having equal highs over here. Okay, sooner or later price will tend to be drawn. Let's say we enter here, price will be drawn to these equal highs. All right, then we can get a risk to reward ratio of 1:1.78. I like to play a little bit simpler so that I can just set and forget. So I just put it right at the swing low support. Right, some people will place it here to get a better RR, but I'll just put it here. All right, target back at the swing high resistance level. Okay, then yeah, I think for this trade is pretty straightforward. Very simple trade. Okay, let me look at one more example. So this whole strategy, right? It works on basically any pair, right? The higher the time frame, oh yeah, and the higher the time frame, the better it will work out. Okay, so if you were to enter on, let's say, daily, right? I think the chances of it working out is a lot higher than the lower time frames. Let me see. Um, yeah, actually for AUD USD, I was waiting for it to come back to this level. Right? I was waiting for it to come back to this level over here. Then I can take sells right about here. But price, I'm not sure, but price is not actually coming up towards my area. Okay, because I really saw that price took up. Let me see. Yeah, we have strong bearish candles over here. We also have a fair value gap. We also have a 61.8% Fibo retracement level within the fair value gap. So this could be a potential sell opportunity towards the downside. Okay, then I think it's pretty straightforward. NZD USD, same thing. NZD USD, same thing as well. Fair value gap. Broke past change of character. Fair value gap. 61.8% within fair value gap. Yeah, so I think this trade is pretty straightforward. Very simple trade to work out. Oh, BTC. Okay, so BTC also works kind of well with smart money concepts, but it's a little bit different. Let me see. Oh, actually, BTC looks like okay. BTC looks like a nice buy area. So daily, okay, daily. But this is already tapped before. Let me see. Let me see. Okay, page 4. 78.6. Page 1. Yeah, I think BTC would probably go up from here. Okay, so for this trade, right, BTC, since BTC is quite volatile, if I were to look at H1, okay, what I will look at is for price to break this high first. Break this high, okay, create like a candle over here. And then what I'm looking at is for it to create a fair value gap. So it will look something like this. Let me just, oh, is it a bit messy? Okay, so it will look something like this. Where is my, okay. So here, yeah, I would like it to have a fair value gap here. Then what I'll do is I'll measure. Then it better be in 61.8, something like this, right? Then I'll enter buys. If not, I wouldn't even enter at all. Something like this. And then my first obstacle will, of course, be this level here, this pullback resistance level. This will be my first obstacle. Okay. So I get about 1:1.9. Then I'll shift my stop loss to break even. Close a little bit, then shift my stop loss to break even. Yeah, so this is what I'm looking at. I wouldn't even enter now because you can see it's quite uncertain. The range is so huge, right? This is my whole range, right? So even though it might actually work out, but this is my whole range. So I want to trade on, this is my point of interest. I want to trade on the lower time frame, which is like about the H1 time frame. Okay. So once it breaks out this high, so let me just yeah, I'm sure that if you guys use TradingView, right? There is this plus sign here, which is like a add alert button. So you can add alert here, or you can just do it manually. Add alert on BTC. Yeah, you can just add it right about here. Add alert. Yeah, this price they can create. Then it will show something like this. BTC crossing blah blah blah. Okay. So this is a level where you can just shift it up or down also. Okay. Whichever you want. Okay. So this is what I am looking at. Okay. Any last questions so far before I end off the session? Any last questions? If we don't have any questions, right, can I get a thumbs up so that I know that you guys are able to catch everything that I said so far? Yeah, lor, Cleon, right? If you usually you all can't see. Oh, Yeah. I think because yeah, I think because it doesn't say who is the host. Yeah, but I try my best to do this series, okay? So that oh, okay, so I think it's not possible to send the recording over, but I think for Esther, right, you could email IronFX to ask them if you could, is there any way that you can watch the webinar again? There could be a portal for you to watch. Yeah, IronFX YouTube, there is a possibility for it to be there. Yeah. Okay. All right. So since no more questions, oh yes, Cleon, thanks for your feedback, by the way. Appreciate it. Okay. So anyways, thank you guys for tuning in to today's webinar yet again. I think 25th August. I will try my best to do the next two uh SMC parts. All right. Yeah. If I can, I would lah. Okay. Yeah, that's all from me to you guys. Thank you for tuning in yet again to today's webinar. So remember to stay safe and trade safe. Okay. I shall see you guys again next time. Bye bye.